morning, folks. Can you believe it? It is the last education room of the year. We made it. Holy smokes. Morning, Jeffrey. Good morning, Steve. Steve, both your trades look great. Just so you get a little feedback before you head out. Your ES trade didn't have momentum. And very often, it takes momentum to take a momentum trade. And that's probably where the fluctuation came in, and you handled it nicely. So, good stuff. Good morning, everybody. Sure is nice to see you today. There it is. My chart's not scrolling. Hey, eSignal, nice to see you in here. I love it when you guys jump in and post when I haven't seen you in a while. Miss Veronica, haven't seen you in here in a while. Nice to see you. Everybody's getting the day off from work, it looks like. Showing up. Morning, Ron. It's a little creepy, Ron. Mr. Trenchcoat, smiley face. Did that make sense, though, Steve? I think you managed it beautifully based on the expectations and the potential. But without that momentum, that's when you start expecting those fluctuations a little bit. So. Guys, it is Friday, December 20th. We had some news at 8:30 a.m. It did move that market a little bit. I was off cooking breakfast. I refuse to trade during news because it doesn't work out well for me. There tends to be an emotional response that I can't predict or control. Not that I can control anything. So anytime I see a red box, anytime I see an orange box, I choose not to trade. That's my plan. You may have your own plan. Some people love the adrenaline. I don't like the indecision. Everything I do is about advantages. Everything I do is about knowing that I'm trading a pattern that wins more than it loses. And if something could just disrupt my pattern without any warning, I don't particularly care for it, so I choose not to. As usual, everything I talk about is going to come from the education page, guys. This is the Nexgen, t3.com. If I go to education, click on trading guide, this is where the answers are. This is where the good stuff is. This is where the rules, the looks, the study sheets, the how to market replay. Guys, this is where everything is. So as we go into our little 2-week hiatus, I want to go to the software guide real quick. I want to make sure, and I think everybody in here. Good morning, John Braxton. Haven't seen that name in here in a while. Ninja Trader 8 best practices, building new charts, screen capture programs, guys, closing your workspaces, market replay, all of your Ninja Trader how-to. Most of it is here. And then if you can't find the answer you need regarding Ninja Trader when we are on break, guys, go to the Ninja Trader website. There's nothing that you can't find there. Google has all the answers. So if you don't find it here, Google that stuff. GTS, as we say in my family. We're going to talk about the high probability trend trade today, guys. We're going to focus on the rules. We're going to talk about the advantages. I'm going to teach you how to study it. I'm going to show you what it looks like. We're going to talk about what it means to you. And I do this every day. So at this point, 10 of you in here, I figured it would be a little slow today. We're doing this for the YouTube video, I guess. High probability trade. Each indicator on every chart agrees with the rules for the trade, guys. Triggers are the strongest, no terminations, nothing between you and your targets. This is the life is good trade. This is the every advantage trade. This is the trade that typically wins 70 to 80% of the time when you follow the rules. This is a trade that they say that confidence is created through the memory of success. When you are successful 70 to 80% of the time, your confidence levels go up. You begin to trust this pattern the way I do. But ultimately, the reason that I focus on this trade first, not the only thing we talk about, but the reason we talk about the high probability trend trade first is it's going to teach you to read your charts. And what it's going to do for you is it's more importantly going to teach you to recognize advantages. That's all we do. Trading is nothing more than putting advantages together to create a trade. So this high probability trend trade it facilitates that. And you'll find that 90% of your day is waiting for advantages and 10% of your day is trading. Unless you're a NASDAQ trader today, and then I was busy this morning. But once you begin to understand what it is you're looking for, what it is you're looking at, you understand where the market is likely to continue. And that becomes your entry. No matter what kind of trade you're taking, initially it's for the high probability trend trade. But it'll work its way into other trades once you learn to recognize these things. You're going to understand where the market is likely to go. This is going to help you with targets, help you make good decisions on the targets that you're looking for. And then finally, you are going to understand where the market is likely to stop. And this is what we call a termination condition. And guys, I see somebody, John, you sent me a message in Discord. Hello and welcome. I will accept it. But remember, guys, if you want to post, if you want to talk, let's talk in the room here. It makes it easier. But I got you. Oh, and he left. The high probability trend trade is 3 rules. That's it. And it just doesn't feel like enough, right? 3 rules. How could I possibly make money with 3 rules? You can. It's pretty cool. Each rule, when it's met, when it's true, provides an advantage. So rule number 1 says that you must have strong triggers. And when you have strong triggers down there in yellow, you have the advantage of momentum. Rule number 2 says that you have to have no termination conditions, that there's room to your profit targets. When you have that rule true, you have a clear path. You have nothing in the way. And when you couple momentum with a clear path, guys, this is where great things happen. So I like to remind you guys that these 2 are probably the most important lessons that I'm going to talk about today, because momentum and path, whether it's identifying a termination condition for rule number 1 in a different trade, or whether it's making sure that you don't take that next trade into the line, these 2 are enough to create a very consistent and very profitable trading plan. Initially, rule number 3 says that it gives you the advantage of an entry area. This is specific to the high probability trend trade. This is the entry that when you couple it with momentum, when you couple it with a clear path, guys, and you take this entry, this is the trade that typically wins 70 to 80% of the time. You're going to find these 2 rules met. The first 2 rules are going to be met on the large chart. The large chart's a very broad stroke of a brush. It's a slow moving chart, if you will. It's difficult to see change on. But your large chart, through the most current bar, the first bar, will define the direction that you have the highest advantage to trade. It defines the momentum created, giving you rule number 1 true, and it defines the areas that could be problematic, and that's where rule number 2 comes in. Once you have rules 1 and 2 met, we go to rule number 3. We define an entry. That happens on a smaller, faster chart. And this is very much, it's just a refinement chart. It takes that 1 bar and it kind of shows you the x-ray of what's happened from the top of that bar to the bottom of that bar. And we use the movement inside to pinpoint where the market is most likely to continue. That's where your entries come from. That's where your risk is reduced. That's where your profit potential grows exponentially. So rule number 3 is a small chart rule. Rule number 3 should only be put into play when rules 1 and 2 are met, guys. Our goal is to only trade when rules are met, because that's when we have the advantage. These 2 charts are a reflection of 2 separate groups in the market. So there's the large crowd. And in the large crowd, there's buyers and sellers. There's the buyer large crowd, there's the seller large crowd. These are the people that create trends. These are the people that create the momentum that we look for in rule number 1. These are the people that react at the key areas on our large chart with rule number 2. Trading with the large crowd, just going with the flow, is one of the easiest things you can do. Fighting the large crowd is what we lovingly refer to as the path to financial suicide. When these guys say up strong, here we go, your best bet's just to go up with them. But there is a small crowd, and the small crowd has a lot of money. and they create what we call retracements, these little fights. You're going to see this on a small chart. You'll never see it on the big chart. The big chart will always stay up and strong during this little fluctuation, this little retracement. This is the small crowd fighting. The large crowd, they lose 70 to 80% of the time typically, which means that when you use rule number 3 to define your entry, you're literally defining where the small crowd is most likely to fail. And if they lose 70 to 80% of the time, well, then you have the potential to win 70 to 80% of the time. So this is how our day goes. It's the same day every day. I love it because I think repetition is what makes this great. We're going to spend about an hour and we're going to learn the Fibonacci rules, the trigger line rules for when it's okay to trade. You guys should simulate. You should practice. Nexgen has provided you the ultimate batting cages. You have working software. You're going to have a trading plan. You have the ability to get in and practice, to recognize these looks, and to do it with zero concern, no financial risk. You can really embrace the ability to have no risk and to get good at what you're doing. So do it. Use it. Don't wait until you think you're perfect, but you have to post in the room. This is the first step to getting to where you want to be. Posting in the room and giving me the opportunity to talk to you about what you see, about the advantages on your charts, to talk to you about your entries, to talk to you about your exits, your management. And guys, the easiest way to do that is to make sure that every time you post in my room, and let me drop this in here so you have it. Every time you post in my room, I want you to talk to me. I want you to point out on your large chart the momentum. And I want you to point out the path, whether it's a clear path or a termination. And I don't want you to take a trade down here and do a termination condition and say, well, look at the clear path up here, guys. We want the information to be what you're doing. Show me your entry. Show me your exit. And what happens is every time you post in my room, see how I got possessive there? It's my room today. Every time you post in this room, guys, I'm going to give you feedback. We're going to talk about the advantages. We're going to talk about disadvantages. We're going to talk about the things that you did well, and we're going to talk about maybe the things that might hurt you long term and how to fix them. Every time you post in my room, it's a private session, so don't be shy. And then we're going to simplify. We're going to focus on this highest probability trend trade. We're going to break it down, how to study it, how to identify it, how to anticipate. I mean, everything. You've got to understand what it looks like so that it becomes easy. You've got to learn these looks because once you can picture the pattern, once you know what the pattern looks like, it magically slows down the market. It's pretty amazing. And that's where the second piece of the puzzle comes in. Use the spreadsheet that I give you every day. Use the spreadsheet that Nexgen gave you when you downloaded the software. Guys, even the CME, when they talk about new traders, they say, hey, you should have a trade journal. The first tab here is a trade journal, but a journal in trading is useless if you don't go back and look at it. So the way this is set up is you can put what type of trade you're taking, because we all take different trades. Drop a picture of it in here because you're going to come back and take a look at it. And guys, that's where it becomes so important to have those annotations. Don't force yourself to remember what you did. Have it written down. Talk about the first two advantages on every trade that you take. Talk about momentum and path on every trade you take. And then you can put in whether you win or lose. It doesn't matter, honestly. For my first 30 days, I couldn't care less about wins and losses. I'm more concerned about seeing the patterns. And then there's the feedback from class section, guys. And this is where growth comes from. If every morning, let's go to, I got all the pictures today. Every morning, look at what you did yesterday. Every morning, look at the previous day's trades. And ask yourself what worked and what didn't work. And guys, I do this every morning. Well, I typically do it every afternoon, every evening when I'm done trading. What worked and what didn't work. My study this week told me that I can't trade into lines. I can't form opinions and forget my rules about termination conditions because when I do, I lose. Those were my losers this week, and they were consistent. So I had to change my approach. That's what didn't work. What worked was taking my perfect rules met trend trade, and it worked a lot. So every day I'm focusing on the good stuff. I'm focusing on avoiding the bad stuff. And by doing this every day, I really do. I set myself up to be able to focus on the good and avoid the bad. We all have a thing. Everybody has a thing. My thing was always trading in determination conditions. Man, I don't know why. I think I get this Superman complex and I trade into these lines that can stop the market. I know they're there. I see them long before we get there. And I guess I just have this fear of missing out. Maybe I'm human. But eventually I see this enough and I say to myself, all right, this doesn't serve you well. This is not in your best interest. Let's stop. And guys, if you post in my room, eSignal, I'm going to look for some newer names, Dennis, any of you guys, if you post in my room 4 or 5 times and you annotate your charts, I'm going to recognize your thing. I'm going to recognize what it is you're doing that's good and what you're doing that's maybe a little troubling. And my promise to you is that we'll work together to fix whatever needs fixing and give you a very clear path to get it done. The second tab is the basic rules. Strong triggers, clear path, high probability trend trade entry, guys. All in green, all pictures of what it means to look like, what it means to have your rules met. And I could have left it like that. I could have just had 3 green slots, right? And this is exactly what it looks like. You need this, and this, and this, and that's what creates a trade. But I think that even more importantly, you need to know what it looks like when your rules aren't met. You need to know what it looks like when it's time to pump the brakes, to do nothing. And you're learning these looks and you're learning to commit to one and you're learning to avoid another. So I'm going to give you something to use that tab the most effectively. And then the user client trades, these are you guys being great with the software. This is momentum. This is clear path. This is entry. Tons of study for over the break, guys. Go start recognizing patterns. That's your high probability trend trade, short and long. I feel like those should be reversed. Just long, short makes more sense to me. There's the most mechanical management beginner plan that I could ever come up with for you guys, designed to get you paid to understand stop placement. And then there's a lot of ideas on how you'll grow with management as you grow with the software. And then the one thing that happens is when you begin to recognize your pattern, when you begin to recognize your trade, when you don't have to think so hard about that high probability trend trade because of the study you've done, because of the feedback you've received, and it almost becomes second nature, you're going to start to see patterns. You're going to start to see things just jump off the page at you. And guys, this is what it looks like when you start finding your next trade, your best trade, your money trade. So take pictures when you begin to recognize things, and take pictures over and over every day, and start filling up the build your plan section, because that's where your pictures go. This is where your recognition comes into play. This is where your trading plan is going to be built. I encourage pictures, guys. I want to see all the pictures, and I want to show you my library as we finish out the year. 7,700 pictures this year. And guys, I'm 5 years in. 35,000 pictures. There's a reason I can look at your charts and know exactly what's happening in an instant. The more pictures you take, the quicker you're going to get there. So let's get through it. We're going to learn the rules. You guys simulate, fill up that spreadsheet. Let's commit to some looks. My promise to you, and my promise every day, is that I will give you everything that you need to be successful with this software before the day is out. The only thing that I can't provide is the experience, the repetition. So make sure that you're doing your part. Rule number 1 says large chart needs strong trigger lines. Large chart leads the way. Always does. And we're going to let it define the trend first, guys. If the background is green on my large chart, ooh, little voice crack, the market's going up. I'm going to look for rules to be met for high probability trend trades long. If the background is red, it's going down. I'm going to look for rules to be met for high probability trend trade short. And rule number 1 says strong trigger lines. So I'm actually going to use these colors to help me out there a little bit. So if the background is green, strong triggers means that my small and large triggers are both green as well. And my small triggers are up and above the large triggers. My large triggers are wide. They're angled in the direction of the trend. And guys, it is the space that's created between the two. Let's draw today. It's the space that's created between the two. And I want you to picture scissors that have opened up, that are ready to cut, ready to get some work done, guys. And when my scissors are open, when that space is there, when the colors match, whoops, forgot that other handle. There we go. This is the look. This is the look that lets me know that the odds are favorable for the market to continue up. This is the look that lets me know that the odds are favorable for the market to continue down. So in this classroom, you're going to hear odds favorable momentum a lot, and you're going to see OFM just tattooed on charts when people are looking for this high probability trend trade. Guys, I want you to go back and learn this look. I want you to see it. I want you to embrace it. And I really want you to commit to the idea that strength and triggers creates a huge advantage of momentum, odds favorable momentum. And this is the look that pushes the market in the direction of the trend. And this is the look that can break those key Fibonacci areas. And this is the look that I'm relying on when I use that refinement chart to buy Fibonacci support or sell Fibonacci resistance. On that big slow moving chart, you're going to see a tail. You can't trade that tail. By the time you know it's a tail, the market's already gone. You're going to use rule number 3 to pinpoint where that tail is most likely to form when your rules are met, whether it's a long trade or a short trade. And momentum dies over time. I mean, it'd be exhausting to have it nonstop, right? This is my best look. And as momentum slows, you'll notice that my small triggers begin to work inside of my large triggers. And once they're gobbled up inside of there, once the scissors have closed, my advantage is gone. I no longer have the advantage of momentum, guys. I'm no longer looking at a market where the odds are favorable for it to push in the direction of the trend. And if you allow it to be very simple, very focused in the beginning, I either have momentum or I do not. And only one of these is going to get you into a trade. Well, then you've got one of the greatest advantages that you can have, guys. A market that is screaming in the direction of your trade. But it means that sometimes you're going to have to be patient. Sometimes you're going to have to squash that fear of missing out, because this down move started great and it slowed down. And I got those anything can happen triggers, and that's where the reversal came from. And this picture doesn't even have the benefit of areas. Just looking at the trigger lines, anything can happen, that's where the market reverses. And it creates that momentum, and it actually gives me one of those tails. Most of you are going to pinpoint where that tail is most likely to form and ride that wave of momentum. And then it becomes weak again, and sure enough, the market reverses. Then it becomes strong again, and there's another one of those tails. And then we get into this transition phase. And I mention that the colors have to match for a reason, guys, because it really is. It's your cheat code to avoid making a mistake, because your smalls might be above the large. But if they're the wrong color, guess what? If these don't match the background, you don't have strong triggers. And if you're larger down but you're smaller up, you don't have that odds favorable, that strong triggers. So this is kind of a transition phase where those buyers and sellers are fighting. And you don't ever have to be a part of that. You just have to learn how to sit on your hands and wait for the advantage to come back. So that's rule number 1. Everybody good with that? That's typically the easiest lesson that you can get. Separation means strength, guys. That's the best way to put it. Separation means strength. And once I have it, I have to make sure there's nothing in the way. And guys, recognizing something in the way isn't a difficult task. Horizontal lines on your large chart can be termination conditions. They're just Fibonacci-based indicators that have the potential to stop the market. These are the areas where that large crowd makes decisions. Jeffrey, I appreciate the oh yeah. I smile every time you type oh yeah in this room. As these are the areas that can create problems. These are the areas where the large crowd makes decisions. This is where fights happen, where reversals typically come from. Big untradeable bounces. So you see them long before you ever get to them, guys. Divergence highs, divergence lows, Fibonacci resistance, Fibonacci support, and yellow one-to-ones. This picture is literally the giant red flag telling you where things can go wrong. That was your mother's response to everything? I love it. I won't tell you my mother's response to everything. It's if you don't have something nice to say. So guys, what happens is if the market is trending up and it hits an area of resistance, that area could stop it. And if the market is trending down and it hits an area of support, that area could stop it. And the cool thing is there is such an easy recipe to see what the decision's most likely to be. And I'm going to give it to you. The first step is you allow price to reach the area. Dynamic Renko bars work their way up to resistance. And once they get there, until they get there, it's a target. Once they get there, all you have to do is ask yourself, where are my triggers, guys? Your triggers will tell the story. Price reaching the area sets off the decision-making process. We're done with price. Now it's the burden of the triggers to let us know. And if your triggers remain below Fibonacci resistance, below that divergence high, below yellow 1-to-1s, guys, this is a termination condition. This is an area that could stop the market. This is an area that could create an untradeable bounce. There could be a fight between the buyers and sellers. And guys, this is an area that could reverse the market completely. If it reverses the market completely, we're going to call it a strong top. And a strong top is the precursor to the highest probability trend trade short you could ever take. A strong top is rule number one for 3 other trades, guys. So understanding that when price reaches resistance and the triggers don't break when they stay below, guys, this is a huge red flag. No more long trades into the area. If the market is trending down, the momentum is great, life is good, and then it hits Fibonacci support. Where are my triggers? Well, my triggers tell the story. They're still above Fibonacci support. No more short trades. No more trades into that area. It could stop it. It could create a bounce. There could be a fight. It could reverse it completely and become a strong bottom, which is the precursor to the highest probability trend trade long. Now, guys, I created this one. I took market movement and I drew in Fibonacci resistance and I drew in Fibonacci support for the sake of the lesson. But I want you to see Fibonacci resistance damn near to the tick, reverse the market. Yellow 1-to-1s, the triggers didn't break, created a big bounce up right to resistance where they kept going down. Weak triggers, that's where my reversal came from. I mean, come on. There's resistance, pushes it down, resistance holds again. There's a fight over and over. Fibonacci support, guys. The pictures make learning easy. But this happens every day. And more often than not, if price reaches an area and the triggers don't break, it's going to jack up your good time. It's going to take your money. So rule number 2 says don't trade into them. Wait for them to break. Wait for the market to roll. Well, it rolls, it looks like this. The large triggers go from red to green or from green to red right off that area. And if it's going to break, it's going to look like this. Once again, the trigger lines tell me the story. Price reaching support sets off the decision-making process, but my triggers will let me know when it's okay to look for that next short trade. And it's when the small triggers and the large triggers, both lines of both, get below support, that support begins to behave as resistance. My path is now clear, and it's going to stay clear until I reach the next area. Price reaches resistance all the way over here. Guys, I have 15, 16 bars. Until both the small and large are above resistance, it begins to act as support. My path is clear until I reach the next area. And it really is that easy. Let's see if we can find a good picture of an area break-in. How do we like this one? It's right here. Let's go through it. It's right here that price reaches. The triggers are above, no trade. And it's right here where that area is broken. And that path is clear until you reach the next area. And it never did, but weak triggers told us not to take the trade. So guys, once you're good with these 2 concepts, it's either a termination condition or it's a clear path, it's going to open the door for the next trade. The second trade, and this is going to be on the plan that I give you today. This is your first medium probability look. And a medium probability look is defined as most your indicators agree for the trade. However, a small issue exists. Issue should be singular. And guys, the small issue is that the area isn't broken yet. And this is what we call a 50-50 look, a 50-50 trade. It has nothing to do with your chances of winning. Has everything to do with the trigger line position because the trigger lines tell the story. When your small triggers smash through an area, but your large triggers lag behind, 50% are through and 50% are not. If you have odds favorable momentum, and let me say that again, if you have odds favorable momentum, if you have strong triggers, this area has the potential to break, but it's not broken yet. So rule number 2 is not in play, and that's what makes it medium probability. These trades are going to happen more often than the high probability trend trade. You're going to see them a lot more often, but they have to be managed a little more aggressively, a little more assertively. So this is why this is your second trade, because it's your chart reading that you learn and rule in the high probability trend trade. It's that chart reading that's going to allow you to manage these assertively, to recognize the trouble, to take quick profits, to get to a zero loss level. Guys, the majority of your trades will be medium probability trades. And then the majority of your day will be doing nothing, guys. There's going to be times when your path isn't clear because of stacked areas. Support after support, divergence low, and you just can't seem to get those triggers through, and you start worrying that you'll never make money in the markets. Guys, this is 90% of your day. True story, 90% of your day is doing a whole lot of nada, a whole bunch of nothing. 10% of your day is trading. But here's the cool thing. The futures markets trade approximately $220 million hourly. Trillions every day. It takes $400 a day to be in a six-figure income. That's it. $400 a day is a six-figure income with your trading. And guys, you don't have to be in every move. Every tick doesn't have to be your tick. You don't have to hope that areas break. You can just get paid at them and wait for the next trade. And that is the difference between the most successful traders I know and the ones that tend to struggle. The ones that are capable of doing nothing when there's nothing to do typically get the most out of the trades that they take. They give the least amount back, and they end their days a lot sooner than you guys that need to be in every move. So rule number 1 says momentum. Rule number 2 says clear path. Let's look at the most current bar on the NASDAQ right now. Well, NASDAQ moves fast. We went from no momentum to potential momentum, and look at the bounce coming off of that 1-to-1 right in the moment. Guys, I don't make trading recommendations or give you advice, but if you're not comfortable with the looks yet, the NASDAQ will absolutely eat your lunch. The NASDAQ moves about 10 times faster than any other market that we look at. And the NASDAQ is crazy difficult to trade if you're not comfortable with what it is you're looking for. So here's a great example of when the colors don't match, guys. My triggers are small and my background is green. I don't have strong triggers. And notice how price reached resistance and all the triggers remain below. And sure enough, it didn't get much past it. And some of you are saying, but price got above. Guys, triggers tell the story. So, is everybody okay with rules 1 and 2? These are the most important rules. I say it every day. Once you get these 2, guys, you're going to start to see things. You're going to see people taking trades in this room that revolve with nothing but momentum and clear path. Embrace it. And then once you have it, let's find an entry. What do you say? Your first entry is a very definitive pattern. And it's so precise that you're going to use a limit order to buy or sell a pullback at areas inside of triggers. Guys, you're going to literally sit and wait for the small crowd to push back to your entry. So much so that in an uptrend, you're going to buy Fibonacci support when the small crowd is pushing it down. And in a downtrend, you're going to sell Fibonacci resistance when the small crowd is pushing it up. So you're going to use a limit order to buy or sell a pullback at an area inside of triggers. Triggers define where those price bars are most likely to return. Whether it is a large chart or a small chart, one of the gospel truths in trading is that price tends to return to the triggers. So when it pulls away, it pulls back. And when it pulls away, it pulls back. And guys, when it pulls away and pulls back to those large triggers, this may have very well been one of those trend trades. So we're going to use that concept that when it pulls back away from the large triggers, it tends to return. So on this small chart, you have what's called large and synthetic triggers. The large triggers are native to the 5-1. That separation between small and large lets me know I have odds favorable momentum on that chart. And then the synthetic triggers are nothing more than the large triggers from the large chart. We only use 2 charts, right? We only use 2 charts for this high probability trend trade. So if price likes to pull back to the large triggers on the large chart, and price likes to pull back to the large triggers on the small chart, when the large and synthetic are overlapping, when they're like 2 snakes riding piggyback, when they're one on top of the other and wide in the direction of the trend, guys, this is what we call favorable large triggers, because it takes that correction point and it makes it as small as it can possibly be. And then when you put areas inside, that's what we're expecting. That's what we're anticipating to create the bounce to continue in the direction of the trend. The areas inside of those favorable large triggers are where we anticipate the small crowd to fail. So brand new users, the tighter these triggers are, the least amount of risk you're going to have, the less indecision there's going to be. And the recipe for finding an entry is consistent, guys. And it begins with having the large chart rules met, by having momentum, by having a clear path. And then this is what your small chart's going to look like, guys, and it's going to be screaming in the direction. And your fear of missing out is going to kick in. But I want you to sit tight. I want you to hold strong. And more importantly, I'm going to show you how to study this. I want you to go study it a little bit in a dead market, in a market that isn't moving, so that you can learn this pattern. When everything says up, you're going to wait for the reversal bar. You're going to wait for the small crowd to start to fight. The reversal bar is not your entry. The reversal bar sets off the process of picking your entry. So once I get this reversal bar, I can even anticipate it, but I need it. Once I get the reversal bar, I'm going to find the trigger lines, large and synthetic. I'm going to identify them, and I'm either mentally or literally going to draw a box from the highest point of the triggers to the lowest point of the triggers. This defines where those price bars are most likely to return. Then I'm going to look inside of those triggers for areas, guys. Trend trades come from fibs, mid-bands, or yellow 1-to-1s. None of them is more important than the other. All of them are bouncy. And I'm going to create a window, because we're good, but we're not always one tick good. So from the highest point of support inside of favorable large triggers, all the way down to the lowest point of support inside of favorable large triggers. This is my window of opportunity. This is where the small crowd is most likely to fail. This is where the market is most likely to bounce to continue in the direction of the trend. This is pretty easy to recognize. It's lines inside of triggers. Your entry is 2 ticks above that highest point of support, and you're going to say to yourself, if the small crowd can push to that bouncy spot, to that brick wall inside of those triggers, well, I want to be in this trade. And I don't want to go from the lowest, because the large chart has momentum. The large chart has a clear path. Guys, this is the best of the best entry. And the time that you spend learning how to define where the market is most likely to continue, it helps you understand where the market should not go. And that phrase becomes imperative for stop placement, because anything below these trigger lines is beyond where I anticipate price to return. Anything below the areas inside of the trigger lines is beyond where I anticipate price to bounce if this is going to be one of my winners. So anything below the trigger lines isn't used for entry. Anything below the trigger lines is where the market shouldn't go. This is where your first stop placement's going to go. So in a short trade, market's cranking down, life is good, nothing in the way, momentum is strong, and you're going to wait for an up bar on that smaller, faster chart. You're going to define your triggers, top to bottom, bottom to top. This is where those price bars are most likely to return. This is not your entry. And guys, you have one line inside of triggers. That one line defines where the market is most likely to continue with the trend. That one line defines where the small crowd is most likely to fail. Your entry goes 2 ticks below it, and you're literally going to sell the market as that small crowd pushes it up. Anything on the wrong side of the triggers is where the market shouldn't go. And this is precisely where your stop will be placed. Guys, that's your entry. I mean, that's it. Should we look at that circle with odds favorable momentum? Let's see if there's any truth to this stuff. Where was that circle? Right back to a mid-band, right there at the triggers. Well, that's pretty cool. It's a tick or two above. Not perfect, but pretty good. And then once those lines get to the wrong side of the triggers where the market shouldn't go, look how the market goes up. Isn't that amazing? Directly into a termination condition. And even with areas inside of favorable large triggers, you're not going short. And then there's a big ugly bounce with weak triggers. So you're going to be able to use that idea of the circles around the tails to go back and look at this pattern, to begin to commit it to memory. And then I'm going to share the 3 entries with you. I love this picture because I've done every one of these multiple times, guys. The first one is the oh no, it's going without me entry. You jump in, don't wait for the reversal bar, and sure enough, the next bar is the reversal bar. All you've done in this case is reduced your distance to profit targets, and you have absolutely killed your risk. Because if your stop goes where the market shouldn't, that's huge. The second common entry is when it doesn't quite get there and heads up, and you panic and you're like, oh no, it's going without me, and you jump in. And I think that if we played, hey, let's be honest with the classroom, I'll put my hand up. Who's taken this entry only to have it go back to the perfect entry? Guys, I've done that too many times because I want to be in the trade. I don't want to miss the trade. It happens. All I've done is made my risk higher and my profits lower. And then when I wait for the perfect one, guys, that's the one. That's got the least amount of risk, and that's got the most room to the profit target. And that's where I typically get that confirmation bar. And once you get that confirmation bar, once you get that reversal bar that's going up with momentum, with the clear path from the areas inside of triggers, guys, you redefine where the market shouldn't go. And your next stop movement, your first stop movement really is 2 ticks below that reversal bar. And it's not uncommon at all to see you guys take perfect entries and move your stops appropriately. And it doesn't always work. And sometimes you get stopped out, but the stop is minimal. The loss is minimal, guys. And that's kind of a lot of fun. So you've got to learn the looks. You've got to go through and you've got to learn what it looks like. When there's momentum, when there's that clear path or the potential to break, go back and circle those tails. Do they line up with areas inside of triggers? If they do, this is your pattern. Commit it to memory. Make sure that you know it so that you can catch it in the live market. And guys, that's really 101. I want you guys to see something. So that bar that we circled, let me give you a little insight on the refinement process. Does everybody see? Whoops. Let me do a rectangle because rectangles are cooler. So I've got a rectangle around 1 bar. Does everybody see that that 1 bar says down, that that 1 bar says momentum, that that 1 bar says clear path, that this 1 bar tells me that it's time to look for an entry? I want you to see what it looks like on the smaller chart. And I'm doing this because, guys, the small chart will talk you out of things. The small chart will try to scare the hell out of you. The large chart never changes with this look. The small chart has a fluctuation here that might be scary. Once you're in, it has a fluctuation here that could be terrifying. It has a fluctuation here that could ruin your day. But guys, all of this movement is inside of that 1 bar. And that's why the large chart leads the way. That's why the large chart tells us to look for this entry. And the small chart is an entry chart. And if I go right back up to the top of that move, there's your tail. It's just a refinement process. So don't let the small chart talk you into things that you shouldn't be doing. This is still a termination. Don't let it talk you into going short at a mid-band that's outside of the triggers where the market shouldn't go. Weak triggers. There's your reversal. Strong triggers. Uh-oh. There's one of those tails. I wonder what it looked like on a smaller, faster chart. It was a pullback, right to resistance, inside of triggers. Holy crap. There might be something to this, ladies and gentlemen. And now we have the potential to break with momentum. Pretty cool, right? Are there any questions about the high probability trend trade before I give you everything you could ever hope for to be successful with the software? Starting with the 101, chart reading 101, guys. This is your homework over the next 2 weeks, Jeffrey. This is your homework for everybody over the next 2 weeks. If you're not where you want to be, I want you to rethink your education process a little bit, guys. I want you to go back and I want you to take 25 pictures each. And this is like 4 hours worth of work. 25 pictures of strong triggers and weak triggers. Know the difference. Commit to one. 25 pictures of a clear path and 25 pictures of a termination condition. Know the difference. This is rule number 2. Take 20 long pictures and 20 short pictures. Why? Because if you take, what is that, 140 pictures. That's it, 140 pictures. I typically take that in 3 or 4 days. 140 pictures so that you know what it looks like when your rules are met and you know what it looks like when they're not. But guys, the goal isn't to just take pictures. Pictures are used. I could take pictures all day, right? Watch this. Here's a picture of the process. If I don't do anything with it, if I never look at it again, then that picture is useless. So what you need to do is you need to take that picture and I want you to annotate. I want you to talk about why it's a strong trigger. This one's from the strong trigger section. Strong triggers, smalls above large, advantage of momentum. This is rule number 1. Look at that. And there it is, perfect. If you do that for strong triggers, if you do that for weak triggers, the time that you spend analyzing the picture, the time that you spend typing on the picture, the time that you spend posting it into your spreadsheet, guys, it creates this functional correlation between what you see and what it means to you. And this is one of the beginnings of building trust. Because every time you take that picture of strong triggers, it's not just going to be the picture of strong triggers. Well, you're also going to notice that the market seemed to go up, right? That it seemed to continue, that it was capable of breaking areas. And what happens is you start to really get giddy about strong triggers. And if you go take pictures of weakness, and that was weak triggers, and the smalls were inside of the large, and it was the loss of momentum, and anything can happen, you're going to recognize that big ugly retracement, and you're going to start saying to yourself, oh shit, this could happen to me. I'm going to go with momentum. Momentum's where it's at. So guys, go through the whole process for the individual looks, and eventually you'll piece them together to create a trade. If you're brand new, here's your cheat sheet. And the high probability trend trade checklist that I'm going to give you, it always asks if the market is coming from a strong top or bottom. Why do I do this? Because I want you thinking about it. I want you thinking about where the market's coming from each time you take a trade. If it is, it's the precursor for the highest probability trend trade. If it's not, there still may be an opportunity. This defines momentum, both directions, and shows you exactly what weakness looks like. It identifies a termination condition, the potential to break, as well as a broken area. And it goes through how to pinpoint your entry, guys. And then the next page should be printed out and put on your desktop. Here's one of the cool things about NinjaTrader 8. Is over the next 2 weeks, or when the market isn't trading, and you're like, oh no, the market's not trading, how am I ever going to get better? Guys, there's market replay. You can go back and replay the day. You can go back and fix mistakes. You can go back and practice these entries. You can go back and recognize termination conditions, guys. Market replay lets you double, triple, quadruple your reps, increase experience. So don't feel like because the market's not active, you don't have to be active in your study. And when you do market replay, print this out, pause it, and make sure your rules are met. Nobody has ever followed this to the letter. Nobody has ever followed this checklist truthfully and done worse than 70%. Hey, Paul, thanks, man. You have a great Christmas too with your boys. All of them. Yours are at that fun age too, man. It's good to see you in here. I hope trading's going well for you. So guys, that's the second thing that I'm going to give you. And then I'm going to give you the KISS plan. And the KISS plan is your stepping stone, guys. The high probability trend trade isn't your only trade. It's your first trade. This is designed to optimize your chances of success with the high probability trend trade. Through simulation study, class feedback, continuous practice, you'll create your own plan based on your ability to read the indicators. But until you're capable of doing that, here's a plan. Here's a plan that's gotten people funded in those prop firms in their first 30 days. Here's a plan that has brought experienced users that have gone wayward back into consistency, guys. And it just says don't fight the large chart. That's your simple plan in the beginning. Before you ever look for an entry, make sure you're not fighting the large chart. Make sure that you're not fighting the momentum that's on the large chart. Make sure you're not trading into those areas on the large chart. If you can do that, you're like better than 70% of the people I work with every day. And then define your entry. And I did your in all caps, guys. This isn't my entry. This isn't Nexgen's entry. The second you own this plan, it's your entry, and you're going to hold yourself accountable. And when you post in my room, I'm going to hold you accountable for your plan. I'm not going to say, oh, Nexgen's rules didn't work here. I'm going to say your rules were followed perfectly. The trade just didn't work. Or you broke your rules. Guys, accountability is a big part of trading. You are in control of your destiny. We're defining the entry because by the time you get to your perfect high probability trend trade entry, you have managed your risk through odds favorable momentum. You've managed your risk by not trading in determination conditions. And guys, that great entry, you're managing your risk because you're going to be as close to where the market shouldn't go as humanly possible. And once you're in this trade, there's one of two things that are going to happen. The first thing, the part nobody wants to talk about, is that you might get stopped out. The small crowd might push through. They might get to your stop. But guys, your stop is 4 or 5 ticks below the trigger lines. It's 4 or 5 ticks deep into where the market should not go. And I promise you, you're going to get cocky when you love and trust this entry. You're going to say things like, they're going to have to come get me. I'm not going to leave my stop inside of triggers. I know price might return there. I'm not going to put my stop above an area inside of triggers. Hell, why would I get stopped out right at an entry point? I'm going to force them to get past everything good in my life, and then my advantage is gone. And that's where I'm willing to give up my money. And 2 or 3 out of every 10, they're going to get you. It's just it's a normal part of the positive equity curve, guys. It's a cost of doing business. But more often than not, you're going to get that reversal bar. So this KISS plan is designed to get you focused on where the market should not go, to get you focused on understanding when it's appropriate to move your stops, guys. And if I get that reversal bar in the direction of my trend, I'm moving my stop 2 ticks below it. At this point, I don't want inflated risk. Because if something goes wrong, I could take a pretty tiny loser. I think we took a trade yesterday that had, what, $30 of risk on it once we got the reversal bar. Pretty cool when that happens. You're like, couldn't care what happens next. Guys, it's either going to go to your first target. This is the idea is trading a 2-lot. It's either going to go to your first target or it's going to stop you out for a smaller loss. The KISS plan is designed to get you paid. The KISS plan is designed to get you comfortable being paid, to make you feel good about getting paid, because getting paid is what creates the confidence. So your first target with the KISS plan is only $100 away from your entry. That's 8 ticks on the S&P. That's 10 ticks on crude oil. And guys, once that first target is hit, it feels good. This is what we call a base hit. And a base hit 4 times is a home run, right? $100 creates confidence. $100 dries up sweaty palms. And there's people, maybe someone in this room, that I see consistently take $100 on every trade that they take, and then they have a plan to let the next one run if it's appropriate. But the KISS plan is getting you comfortable getting paid. And once you get paid, you're going to move your stop to break even, and you're going to take every bit of risk off this trade. And it may not be the best stop placement, but you'll create your own management plan as you grow with the software. And you're either going to get stopped out break even, which, I mean, it doesn't leave a hickey, guys. It's not bad. Or it's going to go to your second target. And again, the KISS plan is designed to get you paid, to get comfortable, to get you in and out of the market quickly, establish a little bit of trust, a little bit of confidence, and have you waiting for the next trade. And $200 away from your entry is the second target. And guys, a $200 target on the second entry, $100 on the first, is a $300 trade, start to finish. If that's the best you can pull off each and every day of your life for an entire trading year, it's a $75,000 year. And I don't know about you guys, but adding $75,000 to your income every year isn't a bad endeavor. Not at all. It would be difficult to be upset about that. If you add one of those break-even trades, you're in six figures. And what's going to happen is with a little bit of study, a little bit of time in this room, watching some other people, going back, circling those tails, looking at the things, and establishing your plan, you're going to know without a shadow of doubt that this is possible. And whether you're making $400 a day right now or not, give me a why in the room if you know it's possible as long as you follow your plan, because that's what I want. Once you believe the plan is good, you're more apt to follow it. Until you believe the plan is good, you're more apt to break your rules. Guys, that's why we go through all these drills of building trust, why we get paid quickly, why we take the best entries in the beginning, because we're developing that trust. Your plan will grow, it'll change as you change and grow with the software. But the thing that never changes is before you enter a trade, ideally all the time, but before you go live, before it's time to test your plan, you have to know exactly why you will enter a trade, and you have to know exactly why you would exit. And entry rules are based on patterns that have been proven to win more than they lose. And that word proven is underlined, guys, and this is very important. Don't trust me. Don't trust me. You don't know enough about me to risk your financial security on me. Go prove it. Go back and learn these looks, learn these patterns, study them, back test it. Hell, try to prove me wrong. Because if you go through that KISS plan and you say, you know what, Novak's full of shit, this will never work, I'm going to follow these rules to the letter and prove it, you'll be with me forever. I've seen it over and over. So be a skeptic, believe it's snake oil, but do the work to prove me wrong. And once you do that, you'll trust your entry rules wholeheartedly. There's no doubt in my mind. But you also have to know when to get out of a trade, guys. Initially, it's the KISS plan, and it's super mechanical. And exit conditions eventually become when your advantage is gone and you didn't hit the profit targets yet. So if I'm in a high probability trend trade, that I'm full of crap. If I'm in a high probability trend trade, I knew exactly what it took to get me in. There's a very specific pattern to get me into that trade. And there's a set of rules to get me out per my plan. Initially, it's just the KISS plan because I want to get paid as a new user. And then I'll begin to recognize some patterns that might take away my advantage, that might need a little bit of management. But once I add the next trade, it's a different set of rules to get in. And it's a little bit different on the management. So I don't want to confuse the two as a new user. I want to make sure that I've got this one down, and then I'll add this one. And then I'll add this one, and then I'll add this one, guys. And this is a marathon. This is not a sprint. You've got the rest of your life to get great at this. And while you're getting great at it, doesn't it make sense to give yourself the highest probability of success as you learn to read the indicators? And then once you've got this, guys, it opens the door for the 50-50, that area not broken trade. And again, you have a checklist designed to optimize your chances of success with that trade. The management's a little bit different. Notice that it says no divergence, strong triggers. Because you're learning to talk to yourself in terms of advantages. Once rule number 2 isn't met, once it's only the potential to break, once the path isn't clear, I want you to see how talking about advantages pays dividends. I have to say to myself, my clear path is gone. Could you imagine looking at your chart and saying, I don't have momentum or a clear path, let me take a trade? What, I would never call you guys fools, but what fool gives up 60%, 66% of their advantages and decides to risk their money? It just doesn't even sound logical, does it? That's why we recognize advantages, guys, because once you understand the advantages, you know what you're up against. You know if you need to manage a little more assertively, or if maybe you need to sit back and let that thing marinate for a while. So when I told you I would give you everything that you need to be successful, guys, I've done it. I've done it. We're there. I have given you the rules. We've broken them down individually, what they mean to you, how to identify them, how to study them, how to back test them, how to verify them, how to validate them. You have been given every piece of literature that I could hope for to make that task easy. I've given you my spreadsheet with almost 400 pictures to go look at those patterns. And I've just dropped a zip file in the room that says everything you need to be, or everything you need. And it also includes the PowerPoint that I used to teach. And it includes the PowerPoint in PowerPoint and also in PDF, so you have access to it. And in every document, whether it is the chart reading 101, that's in there. The high probability trend trade checklist, Microsoft Word and PDF, the KISS plan, the daily goals, the exit conditions. All of that is in there for you. And then the one more thing that I'm going to share with you, and then we're going to take a break because I love breaks. The key to everything is having a foundation. And guys, this is important as we go into the second hour, as we begin to look at the trades that are being presented in the room. Understanding the basics, then each week getting just a little bit better. And that is the idea of Kaizen. And I love this freaking word. And I will come back from break with that tattooed on me. This is the philosophy of continuous improvement. And that's exactly what we're looking for each and every day. We're not looking to be right where we want to be on day one, guys. It's not realistic. Give yourself some grace. You're new. Becoming 1% better every day. And I don't care if it's trading or life in general, right? Can you imagine a lifetime of trying to be 1% better where you would be on your deathbed? But the trade is, the class is designed like that. So for you new users, I'm going to blanket you with very conservative rules. We are going to focus heavily on recognition of advantages. And I'm going to put in your hot little hand a solid plan that optimizes your chances of success while you learn to read the indicators. So, for you new users, all terminations are bad. No momentum is bad. Areas beyond the large triggers are bad. These are blanket rules because it increases the likelihood of success, but they're not always bad. But until you have the experience to know when to use exceptions, it's just safer that way for you. It's easier. It's less stress. The old saying, right? Learn your rules like a scholar so that you can break them like an artist. Just like anything, the more time you spend with the software, the more pictures you take, the more charts you annotate, the more feedback you receive, the more you will see. This is what opens the door. And one of Ron's quotes, and I hate to paint Ron as a smart man, but Ron says that the high probability trend trade is not your money trade, but it's the one that teaches you to see your money trade. And I believe that wholeheartedly because I've watched him live it. You've got to learn the process that yields results, guys. That's all it is. And the results seem to follow. And that's where the KISS plan comes in. If you keep it that basic, if you follow simple rules, and most importantly, and this is why I say this going into the second hour, if you're okay not keeping up with the Joneses, if you don't put the expectations on yourself to trade like somebody with 2, 3, 4, 27 more years experience than you, you can find an extraordinary level of success. Guys, I've watched it repeatedly over the years. There's a reason I keep my class so basic, because basic works. The further new users deviate from simple, the longer they take to get where they're comfortable. Anyone other than me done that? Guys, when you're John Novak's little brother, you try to trade like John Novak. That was financial suicide for me. I couldn't pull my head out of my ass long enough to find 3 winners in a row when I tried to trade like John Novak. But as soon as I tried to trade like Mark Novak, things started working out. So question everything. Have you guys ever been in a classroom where the teacher says, I want you to question everything I say? Guys, I want you to question everything I say. If you don't believe it, if you don't see it, if you don't understand it, it is your responsibility as the student in this classroom to raise your hand and seek clarification. I want you to learn. And I also want you to give yourself a little bit of grace. What does that mean? You're new. Don't put the pressure on yourself to be great at this. You're new. It's a process. It's a learning process, guys. You are in your freshman year of college right now, and it will be 4 years until you get that engineering degree, and probably another 10 before they trust you to build a bridge. This is a marathon. Trading is the same thing, guys. This is your new career that you're studying for. Be okay with being new. And then that is my first hour and 3 minutes. Ladies and gentlemen, you have everything you need. So I'm going to take a break. I'm going to walk around. I'm probably going to scratch my dog behind the ears because she is cute as all get out. When I come back, we're going to look at the charts that you guys posted. And I'm going to remind you guys, this is the last classroom of the year. So if you have a question, post it in the room. If you have a picture you need some clarification on, post it in the room. Don't miss this opportunity for live feedback. I'll be back in about 5 minutes. I'll leave you guys with the S&P right at a big ugly termination condition, and we'll see what it does. Back in 5, guys. I'm not very good at time. That was potential to break. 2 minutes. Sound like my wife, Marty. That was potential to break. Let's see what they look like. Pull back to support inside of triggers. Pull back to support inside of triggers. Guys, I don't have to create pictures to try to convince you of this. If you go back and do this, you're going to understand that it's true. You're going to understand that termination conditions create avoidable losers. Look at that to the tick. To the freaking tick. And now it's going down. All right. Let's start looking at pictures. Andy Man got us started at 12:25 a.m. Great googly moogly. Guys, look at this. He just went through and he's like annotating stuff. This is a weak top. It's not a termination that reversed the market. And that's a weak bottom. That's not a termination that reversed the market. And then he gets odds favorable momentum, potential to break, perfect pullback to support inside of favorable large triggers. He said first contract comes off at trouble, second contract at trouble, and who cares what happens next? Andy, this is an awesome picture. Awesome picture. You don't have to be in a trade to get smarter. That's the beauty of it. You don't have to be actively in the market to become a better trader if you go back and look at things. All right. Miss Jen says, check it out, Mark. Odds favorable momentum, clear path. There is a pullback to the mid band. She catches it on the way down. Jen, did you notice that the small triggers were more than a full bar away there? Good afternoon. Have you been paying attention to that as you look for these trend trades? Because that's a big one for the NASDAQ. And then you get paid. Bought one here, possible trouble. I love it. And Jen, you didn't sell on the reversal bar. Oh, that's crude? You sold before it was a reversal bar. You anticipated a reversal bar, right? Big difference. I am the king of having things screw me by anticipating the reversal bar. Let it happen if that's your rule. Out at trouble just turns into another trend trade. Out at trouble again. Out at trouble again. And then the old one contract instead of buy. I've done that before. I did that yesterday actually. I hit my target and accidentally reversed. And then you got the last two. I mean, beautiful. Great trading, Jen. Great trading. Just trend trades. Those are the same ones that we went back and circled this morning, guys. The exact same trades that we circled this morning. Jen caught live. There's a reason. She's done a lot. Crude slow like a snail. Compared to the NASDAQ for sure, isn't it? All right, I like the way you stack these, Steve. Oh, no worries. I'm going to go through and do it again in case you watch the video. Have a Merry Christmas, man. I will be around next week probably if the markets are moving. There just won't be class. You guys are welcome to post in the room. If I jump in and see them, I'm happy to give feedback. Odds favorable, clear path. Steve gets in, gets paid. Not odds favorable, but clear path. Steve gets in without the momentum. It fluctuates. Great management. He gets paid. Clear path. The easy one had momentum. The more difficult one did not, guys. There's a great lesson there. Great lesson there. Momentum makes life easier. All right, Pete. Couple of oil trades, strong top, triggers rolled, eventually got odds favorable and a clear path. It's the same one Jen took, same entry Jen took, same exit Jen took. You and Jen are clearly in cahoots. And then it pulls right back to that mid-band with odds favorable, clear path. And guys, there was a point where I told you, you don't want to put your stop right where the market's most likely to bounce. And it got you. Wasn't your money. I like it. And then woke up, got back in long. Just a little chilly dog. Odds favorable, clear path. Nice job. The old JTFI. Nice trading, Pete. And then Gary. Clarification, Triggs did not break fib, but there's no divergence. Is this still a strong top? Great question. So let's get you guys an answer. And I'm going to do it through interpretive dance. Not really. And this is probably the best picture ever, guys. So let's do your strong top and strong bottom lesson. The definition, the recipe to define a strong top or bottom. The first thing, it has to be a termination condition that the triggers did not break. The second thing, it must reverse the large triggers. So this is, guys, this is consistent 100%. Things that it doesn't require. It doesn't require divergence. It doesn't say whether or not it's a fib or divergence or one-to-one. So the recipe for a strong top. First, it's a termination, no triggers through. Let's type that out. Well, it's a good thing it's all written out right in front of you too. First, it's a termination. None of the triggers get through, guys. That is the first thing. This has to be done. And it's just a termination until the triggers roll. And watch this. Now, it's a strong top. So that's the recipe, 100% every time, without question, defining a strong top or bottom. First, it's a termination, and then the large triggers roll. So let's go through here, and let's talk about this one. Using the recipe, would this be considered a strong bottom? It reversed the market. What do you guys think? No. Why? Because the triggers broke. The small triggers got through it. And guys, it may go up for the next 17 days, but it's not a strong bottom. Not strong. Triggers broke. And guys, this is strong top and bottom 101. This is the most remedial, easy way to recognize one in the beginning. If, and here I go with language again, if you learn the language of the rules. First, it's a termination condition with no triggers through, then it reverses the market. So let's back it up because I love lessons. And Gary, we're going to go to your chart. What do you think, based on the discussion that we just had, ladies and gentlemen, was that a strong top without divergence? And here's the cool thing. If you don't know, say, Mark, I don't freaking know. Talk about it again. Does that make sense, Gary? Does that help? That's such a great question for the classroom. Because where do we use strong tops and bottoms? To set us up for the highest probability trend trade. To make sure that your rules are met for maybe the next trade, whether it is a white bar trade or an HVA trade or even a momentum style trade. So this is an awesome question. And Gary, thank you. Because what happens is when you guys ask a question in the room, we build a lesson. And we build a lesson, everybody gets better. So I appreciate you posting that in. Great question. And guys, let me throw one more thing out there. This happens a lot as you learn the rules. And you may have a moment where you're like, but it didn't have divergence. And we do that. Let me create my own version of the rule, guys. And when you write that stuff in the room, I yank you right back to simplicity every time. Overthinking is what we tend to do. I do anyway. I don't know if you guys do. Let's find the next picture. Jeffrey Dean. Oh, yeah. Jeffrey, there's that same termination condition. Look, right? Beautiful. Saw a clear path coming off a strong top, but you could have waited a few more ticks more. Confirmation to get beyond the midband. Plus, large triggers have not rolled yet on the large top. So, Jeffrey, based on what we just said, you said that you saw a strong top. Was it really? What do you think, Jeffrey? If we go back to that very basic, it didn't, no, not that, but it didn't reverse yet, did it? And that's the second piece. So not a strong top yet. Beautiful termination condition. Small charts telling the story. And the trade, Jeffrey, the trade is that snap back to the fib right there. That's your momentum style trade coming from the termination with no triggers through. That's the one. But look at, you don't have a clear path. Every trigger line is above those fibs. So you're hoping at this point that that strong top or that termination gives you the push. You have the momentum. The momentum's confirmed. It's already there. You're just jumping in, hoping for the best. Yeah, but what does it say right here? Price reach support, your triggers never broke it, right? Your large chart triggers are still way above here and they're green. Yeah, so you don't have a clear path. And the one thing, Jeffrey, that you're going to find when you start looking for those trades outside of the easy ones, the normal ones, the high probability ones, the one thing that you're going to see consistently in Nexgen's rules are, let me show you, hold on. No termination, that's for the trend trade. No termination, that's for the HVA trade. No termination, that's for the momentum trade. So Jeffrey, I like it. You had momentum and you were, whoop, I just crashed my stuff. You were dancing with the devil a little bit with that, having all your triggers above the areas, and I don't know if you pulled it off. I don't know how it ended up for you. Guys, I love it when you show me the ends of your trades. I really do. But does that make sense? It was a good look. You're coming from that termination, and I'm not saying that you did anything wrong at all. Dancing with your ex-wife. But as long as you understand that look could be problematic, as long as you understand that all of those triggers above these areas, and those large triggers, especially above that reversal bar marker, as long as you look at this and you say to yourself, well, crap, that could pull all the way back to the large triggers. This midband is actually a termination condition because the large triggers are a full bar away. It puts your management hat on, right? It makes you say, I might have to be a little aggressive on my management. Let me not hope that this thing is a big home run. Let me make sure nothing changes in that look. Does that make sense? And remember, guys, it's not my job to tell you how to trade. It's my job, whoops, to help you read your indicators, to understand what you're up against. See, you're looking beyond all that. Okay. Let me see if I can find a nice way to say this. All right. And Jeffrey, this comes at you with nothing but love. You said, F that term, F that term, F that term, F that term, F those large triggers up because I want to get paid here. And maybe you didn't say that for real, but if you did, You said, I don't give a shit about momentum. Clear path means absolutely nothing to me. Give me the freaking money. Tell me how often that works out for you, right? That's where the challenges come in, guys. When you start focusing on the money and you start ignoring, right? Jeffrey, you might have wanted to go long there, and the termination said no. And you might have wanted to go short here, and the termination said no, and the termination said no, and over, these problems come into play. Guys, my hope is that you make good decisions, that you make solid decisions, that you make advantage-laden decisions so that you can be in this game longer. And that's kind of why, Jeffrey, even though you were up $240 at the time of the picture, I'm obligated. I have to tell you about all the things you chose to ignore taking that trade. And you can do whatever you want with it. So there's the termination. Price gets back below, and Ron finds a way to capitalize. 4 lot, $110 each. It's a $400 trade in 4 or 5 minutes. Going with the direction of the triggers, not the trend, but from the termination, everything rolls, and it's quick profits. I like it. And then the same thing, when everything says up and the path is clear, why not get paid, right, Ron? Guys, when I talk about momentum and path, that's it. There's a way to get paid with only momentum and path, and Ron is the best in the business at it. You're trying on quality, not quantity. Then Jeffrey, if you really want quality, not quantity, learn what a clear path actually is and embrace it. Learn what momentum is and embrace it. Learn make it easy in the beginning, and you'll probably take this trade later in life, right? But if you don't understand what you're up against, you may not manage it as aggressively as you need to. Was that it right there? What was the time on yours? In your mountain, are you mountain time? 8:49-ish. Okay, you are Eastern. And that was crude oil? At 8:49, mine looked like this. That doesn't look anything like yours. Hold on. $8.49, $69.20. Where is $69.20? Was that crude oil? Hold on. Oh, I'm on the wrong day. There we go. So there it is right there. Don't care about this chart. 8:49. All right, so there's your entry. Cool. So let's talk about it. There was your entry. Where was your exit? Did it get to your targets? 67 and 63. It did. It got to 67 and not to 63. So let's talk about the other stuff, man. With that momentum, off the termination, you took it. I like it. I'm not beating you up. Just wanted you to say if I have to manage it, I have to. So right here, that close on the wrong side of those small triggers, that's your party overlook. Do you recognize that? I think with the termination condition up top, that was your best entry. You took the second chance where it snapped back up towards the mid-band, and then that's where party was over. Good stuff. And I like going back. I like seeing what it did. Because if it ended up pulling back to those large triggers, there's a great lesson. So good stuff, man. And I don't beat you guys up. I try not to beat you guys up. What I try to do is say, hey, let's just talk in terms of advantages. Because when you do that, you know how you need to manage. All right, Miss Jen. Triggers clear midband. Areas inside of favorable. So right here, odds favorable, clear path. Entry here, not here, late. NASDAQ moves like a freight train. It does. And you're out down at trouble. Nice job. Great trade, Jen. That's one of the things about NASDAQ. When it's right, it moves. Are you trying to use the reversal bars, Jen? For you guys that have a reversal bar as a must entry, let me see if I can. It's okay. Let me show you what I do sometimes, and maybe this will be helpful. And guys, just because I do it doesn't mean you have to do it. Let me be very clear about that. But once NASDAQ opens up for me, Jen, we'll take a look at it, and I'll show you how I kind of squash the crazy a little bit and get into position sooner than later. Maybe it'll be helpful. Maybe it won't. Termination, odds favorable, everything says down, and you take the jump in, doesn't work, great management. You take the mid band and it doesn't work, and man, that's a double whammy. That is the jump in trade, great management on it, and then the perfect looking trend trade. And guys, anything that wins 70 to 80 has to lose 20 to 30. And look at this. Bottom line, I'd take these trades again. All my rules were met. They just didn't work. On to the next one. Guys, that's what it sounds like when you trust your plan. Pete, not a winner to see there. I love everything about everything that you just showed me there. Nice job. Following your plan, understanding it doesn't win every time, and being okay with it. Ron, odds favorable, momentum, room to the target, and you hit the freaking target again. Does it ever get old doing the same thing every time, Ron? Do you ever get bored always having momentum and a clear path and nothing in the way and getting paid? No. Have you guys noticed that Ron's posted 5 times in the room today and every trade looks exactly the same? Every target looks exactly the same. Every entry looks exactly the same. Guys, there's a great lesson there. There's an amazing lesson there. Consistency. Jen says, you know what? If Ron can do it, I can do it. Odds favorable, clear path, find the entry, get out of trouble. Momentum, A on all charts. I love it when your speech impediment hits, when you type. There it is though, momentum and path. Momentum and path, momentum and path, momentum and path, momentum and path. What was that thing I said? Once you learn what? Everything else kind of comes into play? Momentum and path. Jen, beautiful trade. That was a was? A-O. That doesn't even make sense. You're typing fast. Great trade. Beautiful trade. Momentum and path. Have I mentioned that? Momentum and path? All right, we got Pineski. I just like saying that. Paul's like, Mark, let's make this as big as we can. So there's a termination condition. It reversed the market, and that was a strong bottom. And Paul says, check it out. With that look, I'll buy a pullback to support right inside of triggers. I'll take my first profits, and I'll make sure that I don't lose on the trade. I love everything about it, Paul. Out freaking standing. Everything we teach every day. Odds favorable, potential to break. Market pulls back, it's NASDAQ, and Wayne says, you know what, I'll catch it on the reversal bar. Beautiful trade. Awesome trade, Wayne. Just trend trading, guys, that's all it is. Just taking trend trades, having fun with it. And then Paul, that same trade. Nope, little different. All indetermination conditions, and you take it anyway. and you make money. Nice job. Once you're a chart reader, you might choose to trade into termination conditions. That's up to you. Everything says up. The path is clear. Little late on the entry, I think. And then you get out of trouble. Nice job. Maybe just a little bit late on the entry, but it didn't hit your area. So I see why you did it. You take the reversal bar knowing you have room to the profit target. Nicely done, Wayne. And then, Ron, are you serious? Another one? Ron's like, ooh, everything says up. My path is clear. Let me get paid. Holy crap, Ron. You're killing it today. Killing it today. Paul, did we already look at that one? Wow, there it is again. Strong trending market. Buy it till it stops working. Great job, Paul. Marty, same look. Okay, Marty, do you see how your triggers are nonsense here? Right click on that chart and reload historical data. Or click on the chart and hit F5 and rerun the ninja script. Yeah, if it ever looks stupid like that, it's stupid. Change it. Anything can happen. Attempted entry here, slow on the click. And then it got a tick below resistance. You protected yourself. Nice job. If I'm that close to my target, it's okay to protect myself. Nicely done, Marty. Bell says, check it out, Mark. This happened yesterday. Weak top, odds favorable, chili dog, enter after fibs, multiple trades. So let's see what we have. It's hard to read. 620, 620. So here's where we started. Directly into a fib. But you had enough room to the fib to make 50 bucks and you held a little bit longer. Get stopped out when the fib bounces. Let it break. Get in. Got out with a reversal bar. Get in. Out at the fib. Get in. Out at the fib. And you hit the biggest, ugliest termination and held that one a little long. That's a lot of trades, Belt. Yeah, room to target is the one thing I'm going to say. Room to target, dude. It's so important. Everything's up. You're in when it clears. Out. It hits the bouncy point. And you give it back. Nice job. And then weak bottom is irrelevant. Belt, from down here, by the time you're up here, this has nothing to do with anything. It's so far in the rearview mirror. At this point, you're just riding momentum, and you did it beautifully. You did it really well. But there's a point where that strong top or bottom is too far behind. Odds favorable, clear path on this chart. You jump in, out at trouble. I like it. Not holding past the termination belt. Good job. Everything says up. 95, 95. You let it clear. It's cranking. Once again, bing, bang, boom. You got stopped out a little early there, right? Well, I'll go to a picture and I'll show you exactly what I mean. And then Ron, just one more time. Let's get paid. Like Trump says, you never get tired of winning. Amen. So, Belt, let's do a lesson on it. Click yes, Marty. And save your workspace. If you're not saving your workspace, it's going to try to do it every time. I don't know. Then you're broken. I don't know. I don't understand what's happening. Sorry. Once you roll, you should be rolled. When you close your workspace, you're hitting save. You're like, hey, workspace, close, and then you're hitting yes every time? I don't know. That's weird. I'm not going to lie. That's weird. All right, so check it out. Are you ready? Let's find a lesson on my thoughts on a strong top or bottom. And this is beautiful. All right, so check it out. Belt, thank you for setting us up for a lesson. So here's my strong top. What does that mean? That means that the buyers were in control. In control and right at a key area. The sellers said no more and reversed the market. Why is that important? Because from here, this was such an impactful decision that a 50-50 trade right here has a higher chance of winning. That a 50-50 trade right here at the mid band has a higher chance of winning. And then honestly, Belt, the mid band for me and any fib next to it, that's kind of where, if the buyers are going to take over, that's their last ditch effort for the most part. Like if it's been trending strong all day, even with the strong top, this is the highest likelihood of the buyers trying to kill him again. It has a little better chance of breaking because of the key area. But once I get down here, that strong top's done what it's going to do. It broke me through that mid band. It broke me through that fib. It just becomes far enough in the rear view mirror that I don't worry about it so much. Then I'm just looking for rules to be met. Does that make sense? There's a point where it's too far away, where that impact is no longer impactful. Ron, I hope you have an amazing holiday. We'll see you next year, man. Been a great year with you in here. And then let me just add this on here. Once I get down here, I'm so far away from that impactful decision. I'm not sure it is still effective. We'll call it impactful. You just like following your rules? I love that. Me too. It doesn't impact all trading. I think that it impacts that HVA trade that happens right here. It impacts those momentum trades that happen right here. It impacts that 50-50 trade that happens right here. And I do think that that strong top or bottom creates a lot of warm fuzzies, like right in this range. Does that make sense? And it's just like anything. If you shoot a bullet through a wall, by the time it hits the fourth wall, it stops. So that was awesome. Good job. And then one of the things I encourage people to understand is that a strong top or bottom, and I used to get this a lot from people, a strong top or bottom doesn't guarantee that it's going to break, that it won't retrace, right? A strong top doesn't guarantee that a termination condition is just going to magically go away for you. And that goes back to what you just said, Belt. Having your rules met, that's where it's at. Because your rules have been proven to win more than they lose. I love it. Good stuff. Good stuff. ES has been screaming for the last 10 minutes. Guys, the market's been crazy today. It has been crazy good. When the market runs like this, when the market does this stuff, they ended. Strong trend is over. We got a reversal bar. Guys, when the market is running, there's a lot of money to be made. Well, I see it. It's right there, 1032. What am I missing? At 1032, that was about the end of the scream. Then we got the reversal bar, and that's what ends the strong trending market. But it was. Look at that. And it came right from a termination that reversed. That's that strong trending market. And you just keep freaking going until it doesn't work. Until it doesn't work. Pretty cool. And yeah, Ron always says that's his favorite look for the chili dog trade. That strong trending market. That's his absolute favorite look. And guys, the thought process is as long as I have a strong trending market, when your money happens. As long as I have a strong trending market in place, I'm going to keep buying the mid band until it doesn't work. And that would have represented where it didn't work. Yeah, that one they didn't, right, Paul? And you caught it down here beautifully. And that would have been another opportunity in that strong trending. And now look at that. It's going kind of crazy. And Marty, I love that you say not my money. I love it when you say not my money. My rules weren't met. Wasn't there. Not my money. And yours was a weak bottom. Oh, down here? Yeah, it was. One of the reasons, right? One of the reasons why strong top or bottom doesn't necessarily mean that, you know, that's a weak bottom. And they railed for how many points? 65 points? 69 points? From a weak bottom. That's why strong tops and bottoms aren't the end-all be-all. Good stuff. Man, Marty, I wish I had a nickel for every time I've watched the market just absolutely scream and I didn't have rules met. And in my head, all I want to say is like, oh man, if I only would have, if I just could have, if there was a way that I might have. And man, that's such a dangerous thought process because that's what leads you to breaking your rules the next time, I think. Allegedly. What do I know from nothing? I don't know. Whoops, wrong one. It does, doesn't it, Pete? But it happens sometimes. Guys, just a reminder, this is the last class of the year. This will be the last time we're talking this year officially. I don't want anyone to show up Monday wondering where the hell we are. I'll probably still be here. I'll be trading Monday. I'll probably trade Monday and Tuesday and see if there's some good movement. Sometimes holiday trading's not bad. Sometimes it's like watching paint dry. So it just depends. I believe so, Marty. Double check the CME website. But yeah, typically they close early on New Year's or on Christmas Eve. Holiday trading hours CME. I think it surprises people when I don't have all the answers. So early close on Christmas Eve. And then they will resume at 4 o'clock on the day after. Nope. Wednesday, December 25th. 4 o'clock they'll open. And then it looks like normal on the 26th. New Year's Day, Tuesday, December 31st. Trade date Thursday, January 2nd. So it will be closed on the 1st. So I don't believe in the development of a strong top. Belt, because I still have odds favorable momentum to the upside. There is so much work that has to be done before that's a strong top. And I am odds favorable on the large chart, and I'm every indicator up. And it could be a strong top, but it's not even close now. And the reason I say that, and I know I'm a pain in the butt, guys, because if I start thinking, ooh, this is a strong top, oh, look at that, that could be a strong top, then I do stupid stuff. And this is just me personally. I go, oh my gosh, because this could one day possibly be a strong top. Man, I'll just go short. I know that my rules aren't met, but oh my gosh, one day that could be a strong top. So let me just jump into the market because those small triggers are down. And that is the only indication anywhere that anything even begins to say down. And Belt, I'm not saying you would do that because I know you don't have plans that say that. But that's what happens sometimes, guys. Have you ever, here, let's do a fun little example. And we're going to ignore what the large chart says. And guys, have you ever said to yourself, the market should go up from here? Well, I mean, you should watch it all day and wait for your rules to be met. Has anyone ever said, okay, I'm going to go long right here? Whether the rules are met or not, you decided that the market needs to go up. And then when it doesn't, you see it almost form a reversal bar right here. And you're like, no, it has to go up. And then you get stopped out for your second trade. And then you're like, no, seriously. This has the potential to keep going up. And then you get stopped out right here. And you're like married to this trade, right? You're married to this trade. All because you believed that it could be something, but the rules didn't say it. And I know you're following a plan, right? If I was playing the which direction has a better chance game right now, I would say up. I would say with all that momentum, if I was going to jump in arbitrarily, I'm jumping into the upside because it's odds favorable. But again, I wouldn't trade into a termination condition. That's just ridiculous. But it's hard to stop a freight train, right? And that's where I think stay focused on the direction that you see. Stay focused on what's happening now. And you can play the if-then. This could be a strong top. This could be a strong top in 17 bars worth of data. But what's going on now, right? What's going on now? Now there's just nothing. There's nothing. Unless the freight train hits a nice juicy fib. The way it did there, right? Ooh, hold on. The way it did there, 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 the way it did there. F that freight train and the fibs. I'll wait for the pattern. So there was a guy, and this is kind of fun. I don't know, maybe it's fun. It wasn't for him. There was a time, and I want to say it was the 90s, where the S&P tanked. I mean, tanked. And it was a Nexgen client, and he said, I'm going long right here. I'm going long right here. This market's going up forever. Belt, don't do it. And when it came back to his entry price, he went long some more. And when it came below, he said it can't keep going down. And he went long again. And he said, there's no way it can keep going down. And he went long again. And he said, I better go long again. Now it's as low as it's ever going to get. That's got to be the bottom. This has to be the bottom. And guys, this is a true story about a real person. At the end of that day, in a market that never went up, it was a $12 million opinion. It was a $12 million opinion. because he just said there's no way it could keep going down. And I love your juicy fibs. It's beautiful, looks just like mine. Who cares? You had the same momentum look into this one and it goes up. It just... follow your rules. That's all you can do. Just follow your rules. And work the way your brain works, right? If your brain says that's a big juicy fib, I have to go short, go short. It doesn't pull money out of my account. That's up to you. But I won't tell you to go short. I won't tell you to go long. I'll tell you, I don't give trading advice. I can tell you that one of the things I say every day is don't fight strong triggers. Every day I say don't fight strong triggers. If it's really going to be a top, your small chart will do something to indicate it. Small chart hasn't blinked. Not even a little bit. So, anyway. Alright, that's the end of the second hour. We survived it. You guys did great. Very proud of you. Why fight them? Why fight strong triggers? And I don't give advice, Jeffrey. But I say the same thing every day. The same thing every day, guys. When I teach the KISS plan, every day, I say the same thing. I said, this is how to commit financial suicide. This is how to commit financial suicide. Fight the strong triggers, fight the termination conditions. Hey, Jen, are you in here? Jim Forbes asked me to have you call him on Skype if you don't mind. Present. Because if you don't, he's going to keep hounding me. Thank you. You're amazing. If I ever rewind the clock 50 years and have more kids, I'm naming them Jen. Look at that, triggers 1. Isn't that cool? We went from the potential to be a strong top to holy shit, it keeps going up. All right, guys, I'm going to take a break. And because